How's it going, investors? I'm Ari and welcome back to the channel. As always, we are here talking about value and dividend investing. And given we are just closing out the month of November, it is now time to break down all of my dividend income that I've received throughout the month. That's 7 different dividend paychecks. Be sure to stay tuned to the very end of the video because today we're going to be jumping right into that dividend tracker so you can see the true power of dividend growth investing. Now, just before we dive in, as always, give that thumbs up button a click, and most importantly here is joining me on the journey if you haven't done so already by simply clicking on that subscribe button as well. Now, investors, let's get right to it. Now, just before we get going and breaking down all of my dividend income, I want to give you a quick update on where my account currently stands. Just given all the recent market momentum that's been building up, my account has climbed to $105,216.67, and I'm personally only projecting more momentum to come with the next interest rate hike decision, but more on that to come in the next video, so stay tuned. As for how I go about these videos, I'm not only going to disclose how much I received from a particular company, because that's not going to do so much for you in terms of value, and honestly it's not that fun to create for me as a creator. So we're going to go a step further. I'm going to share my thoughts on the company, whether or not it's a solid investment and a buy at its current evaluations, at least in my opinion, and then share how much that company paid me out. So with that said, let's rewind all the way back to the first of the month where we received my very first dividend paycheck. This one came in from the world's largest telecommunications company, that is AT&T, ticker symbol T. Now, as many of you know, AT&T was once a dividend investor fan favorite, just a powerhouse of a dividend investment. That wasn't until the news of their mega deal to buy Time Warner, to the more recent sale of Warner Brothers to Discovery, and then a dividend cut announcement. Yikes. We ultimately saw a massive sell-off, and AT&T has remained in the red for some time. I personally think the merger and dividend cut was necessary for AT&T to honestly focus on their future, and that's exactly what they're doing, which is necessary. Now, we can see that AT&T is finally making some headway as they're up on the year by about 7%, trading for about $20 per share. As of right now, if you are an AT&T supporter, perhaps it remains a time to buy it, given their PE ratio is just at 7, and with hedge funds actually pouring money into AT&T, it is just added confidence for shareholders. But it also tells me that these hedge funds are adding some padding of safety to their portfolios given a potential recession may be on the horizon. But here's something particularly interesting. We do in fact see that website traffic, so people visiting AT&T's website domain, is increasing on the year, which should pose the question, what exactly does increased website traffic to AT&T mean? I'd personally like to believe it means that people are going to transact ultimately with AT&T and buying their mobile services. Now, in regards to analysts, we do foresee growth, roughly 5.9% worth of upside to come. And as for me, I am currently holding just 12 shares worth of AT&T, and therefore it may be a position I sell out of, not because it's a bad investment, but rather because I can use that money to further build up one of my core positions. But for those 12 shares, AT&T sent me $3.56, given their dividend yield is coming in at 7.07%. As for my second dividend paycheck, it was also deposited into my account on the first of the month, but this one came in from a leading restaurant operator, Darden Restaurants, ticker symbol DRI, which is in my opinion a dividend stock that simply doesn't get enough love from dividend investors and within the dividend investment community for reasons that are far beyond me, especially when this company operates some of America's most popular restaurants like the Olive Garden and Longhorn Steakhouse, to the more fancier Capitol Grill and Eddie V's. The firm was founded back in 1968 and has flourished into the industry leader that it is today, coming in with a $17.74 billion market capitalization. Now, it's honestly been performing quite well over the year, up by 2.3%, trading for around $147 per share. And at this moment, its P ratio is at 20.4, so wouldn't necessarily say it's a great opportunity to jump on right now, but definitely add it to your watch list, especially if we head into a deep recession. I mean, that's all I'm going to be saying is that I'm going to be adding more shares worth of it, and it's a great dividend investment for dividend investors. I currently just hold 5 shares. Now, Darden sent me $6.38, given their dividend yield is coming in at 3.19%. Jumping to the 10th of the month, we had the world's most valuable company come in hot, paying me my largest dividend paycheck of the month in November. That company is Apple, ticker symbol AAPL. Of course, Apple doesn't have the largest dividend in the world, and actually, out of all of the dividend stocks that I hold, its yield is of course the smallest, but because it currently makes up about 17.5% of my portfolio, and hopefully 20% within due time. I'm excited to share that there's still opportunity for investors out there when it comes to Apple, especially as tech titans across the board continue to struggle from dismantled supply chains to just interest rates rising, therefore giving way to Apple's share price sliding on the year by about 18.2%, now trading for $148 or so per share. Now, I certainly wish I took full advantage of these lower share prices just weeks ago in the mid 130 range. But here we are with Apple still at a P/E ratio of 23.1, which I don't think it's going to drop much lower. After all, true value is what you get and not necessarily what you pay. And with Apple, where does one even begin? Now, I personally am incredibly excited for the future of Apple. Their product pipeline looking more and more advanced into the future here with their VR headset to hit the market in 2023, on top of the Apple Car to come out in 2025 that I think is going to be a major competitor to Tesla. So if you think this recent mini war between Cook and Musk was something to talk about, just wait until Apple Car hits the road. Of course, smart money has just been pouring millions of dollars into Apple more recently, and quite frankly, I don't think hedge funds are going to be backing away from Apple anytime soon. As for analysts, yes, they too are loving Apple, coming in with a strong buy rating with a price target of around $180.70 per share. That's over 22% worth of upside. Now, as for myself, I currently hold 114 shares, which again will be increased soon. But I just received $26.32 from Apple, given their dividend yield is sitting at 0.62%. Moving right along to the 15th of the month, my big real estate payday. I had 2 real estate investment trusts send me dividend paychecks. And before I get into these dividend paychecks, I want to share that REITs or real estate investments in general right now are great for these higher inflationary periods that we're living in. And not to mention, both of these next 2 investments pay dividends on a monthly basis, allowing for me to truly feel like a landlord. Anyhow, the first REIT I want to discuss is Stag Industrial, ticker symbol STAG. It was founded not too long ago in 2010 with a focus on single-tenant industrial properties, specifically focusing on warehouses. Now, ultimately, they have 551 properties within their portfolio that span across 40 states, but honestly, it's their clients that impress me even more, with their top client being Amazon, followed by Eastern Metal, American Tire, and FedEx, just to name a few more of their clients. Their growth has honestly allowed for the ballooning of their market capitalization to pop above $5 billion. And yes, as we speak, Stag Industrial has been struggling. Over the last few months to the last year or so, we can see that Stag is down 27% on the year, trading for $32 per share, likely with disrupted supply chains and many companies that are reducing inventories based on supply and demand. But when an economic turnaround comes about, in addition to the future just being, well, e-commerce centric, I have a feeling that Stag Industrial is certainly going to be able to capitalize on all of it. Now, as for analysts, there's some promising price targets coming in at $37.83 per share. That's about 15% worth of upside, and that places Stag back where it was before all of this market mayhem. So I'm likely just going to continue to dollar cost average my way into the position. At this time, I hold 29 total shares worth of Stag Industrial, which allowed me to receive $3.60, given their dividend yield is coming in at 4.64%. As for this second REIT, it is the REIT of choice. We have Realty Income, ticker symbol O. That's a firm that's focused on single-tenant commercial properties, and since its founding in 1969 has become a net lease solutions leader with, in my opinion, the most dominant real estate portfolio in the game, with over 11,000 properties spanning across all 50 states and even to the United Kingdom, in Spain, and Puerto Rico. Now, with clients like Walmart, the Home Depot, CVS, and 7-Eleven, we're just talking about reliability and deliverability to shareholders as a $39 billion market capitalized company. And right now, Realty Income is also down on the year nominally by 7.75%, trading for around $63 per share, which presents an opportunity, and thus we see smart money actually capitalizing on this steal of a deal. For analysts, there is some solid upside potential here to come, about 6% worth of it, with a target share price coming up to $67.25 per share. At this time, I only hold 103 total shares, which allowed me to receive $25.62, given Realty Income's dividend yield sitting at 4.74%. And finally, our very last dividend paycheck to break down came in from the world's most beloved coffee house chain, known for their mocha choca frappe sugary lattes. We have Starbucks, ticker symbol SBUX. Now look, I'm gonna come clean here and share with you that I'm not the biggest fan of Starbucks coffees. but I'm certainly also going to share with you that I do enjoy those dividends. Thanks to every white girl and their mother out there and all of you guys. It is pumpkin spice season, so jump in line, buy those lattes, and I'm going to keep collecting on these dividends. As for Starbucks, from an investment standpoint, it is down on the year by about 10%, trading for $102 per share. P/E ratio is a bit high here, coming in at 34.8. So for that reason, I'm out of the buying game for it right now, but I'm not going to be able to resist that Starbucks share price should it slide back down, given this is a $113 billion market capitalized, latte pouring, money printing, dividend rolling machine with their 33,000 plus locations and operations that continue to expand in over 80 countries. And something interesting here to note again is website traffic when it comes to Starbucks, as we see a total in visitors on all devices up over 96% from the same period last year. The hedge funds, well, they're also pouring millions of dollars into the position. And in terms of that dividend paycheck, I received $10.71 for owning just 20 shares, with that dividend yield of theirs coming in at 1.99%. Now, just before we get to the dividend tracker, I did have a dividend flow in from simply having my money in a Vanguard settlement fund, which totaled $21.83, bringing my grand total on the month to, wait for it, $98.02, which is yet another record here, and incredibly exciting to see all of this growth when it comes to rolling my dividend snowball along. Now we can see beautiful gains on a month-to-month basis. Moreover, I want to direct your attention to our total on the year coming in at $1,315.06, and my monthly average here at $109.59. And there you have it, my friends, the easiest passive income stream that you could possibly build, growing stronger and stronger on a month-to-month basis right in front of your eyes. Now, just before we get going, if you're a dividend investor out there, I just have to know how much dividend income you personally brought in this past month of November, and of course, which stocks within your portfolio paid you out the most. Drop all those comments down below. Of course, understand that I am not a financial advisor, so always do your due diligence following my videos. Now guys, tap on that thumbs up button, it helps me grow this channel, and most importantly, I am trying to get this channel to 10,000 subscribers, so if you are not already subscribed to the channel, go ahead, tap on that subscribe button as well, and until the next video, I will see you all there.